So the profit and loss account, Prof. Frank, can you share anything you know about this account? Why we prepare it and some of the items that we take into this account? Hello, Prof. Frank.
So the profit and loss has been an explanation, but I'll say that in preparing it, the things included are the rent and rate, electricity, the insurance prepaid.
Okay, so with what you are saying, let me quickly review what we discussed yesterday. So yesterday we were able to establish that the trading account is prepared for something. Can you tell me that? The reason why I prepared a trading account?
Yeah, to obtain sole traders gross profit or gross loss.
Exactly. And what are some of the things that we put in there? Or what are the two main things we compare in the trading account?
The net sales and then cost of goods sold.
Okay, that's the cost of sales. Okay, thank you very much. So for the profit and loss account, first and foremost, it is prepared to determine net profit or net loss. So it is prepared to determine net profit or net loss. Now we'll get to know what this net profit or net loss is. In other words, it is prepared to ascertain profit or loss a business makes from all of its operations, to bracket, both trading and other operations. Okay, so let me give you an insight into this. The profit and loss account, first and foremost, is to determine net profit or net loss. Now, why net profit or net loss? When we talk of this net profit or net loss, it is looking at all the operations a business is engaged in with the aim of making profit. So, for example, I deal in buying and selling of cars. So I'm a car dealer or a car trader. I buy and sell cars. But apart from that main buying and selling, I could also do rentals. If you need a car to rent to do a wedding or travel, I can provide those services. Now, those other operations would also bring in income. Apart from that, I could also do investments in other businesses or even in government bonds and treasury bills. Okay, so the net profit is looking at all the activities the business is involved in. That is why I put here in the bracket both trading and other operations. Okay, so the net profit is like looking at the total income the business is getting from all of its operations, primarily from the trading activity and any other activity. Okay, so in the profit and loss account, basically we compare total income with total expenses. So in the profit and loss account, you are matching your total income with your total expenses. Okay, so if the income is more than the expenses, then you get a net profit. If it is the opposite, you get a net loss. Now, what it simply means is that after preparing your trading account, the profit you got from your trading, you add on any other income you are getting from other operations, and then you less all your expenses. So now the burden lies on us to know what the income of a sole trader could be, and then what the expenses of a sole trader could be. So this one, I want to hear from you, my professors. Alexia, starting from you, what are some of the income that you can speak about when you are looking at, let's say, a tomato seller? If I ask you to give me the insight of how a tomato seller gets income, what can you tell me? Oh, your microphone is not still working, I guess. Prof. Alexia. Hello, are you there? You type in the chat, let me know the status of your microphone so that we can move it. Okay, so Alexia types in the chat. It's okay, you are here. Okay, so I'll pardon you some of the questioning, but where the answers may not belong, then you can type in the chat for me. So let me digest myself. If you look at a tomato seller, the major source of a tomato seller, major source of income for a tomato seller, one is the profit she's making from the buying and selling of the tomatoes, which we have all agreed that that will be the gross profit. So apart from the gross profit, this tomato seller probably could be engaged in other operations that brings in income. For example, she could store the tomatoes for customers who have bought tomatoes but have not taken delivery. Okay, so she can store and preserve the tomatoes for them and charge them some commission. Okay, so that commission would also form part of the income of the business. Or maybe she's doing some savings somewhere with a bank or with a financial institution where she also gets some interest from there. Okay, so the total income of a sole proprietor mainly, first and foremost, is from the trading activity, which is the gross profit. Then you add on any other income. Example I gave is maybe interest on some investment or commission the business is getting from performing some services for customers. Okay. Now, when we go into the expenses that you can, Frank gave us a hint on some of the expenses. So we are talking about the salaries, the rent, the light bills or electricity bills, telephone bills. Okay. If we take a bookshop, for instance, a bookshop, you need a place to put the books. Okay, that place may not be free. You pay rent. You also need light, so you'll be paying for light bills or electricity bills. Sometimes you have to call your customers or suppliers, so that's the telephone bills. Sometimes you have to post certain things to customers or suppliers, so postage expenses as well. Maintenance, okay, cleaning expenses. So expenses are all the associated costs of doing business, right? Now, this is what I'm going to do for us. I'm going to put on the screen some of the expenses and income that we have to pay attention to when it comes to a sole trader. So, Prof. Frank, you do me the honor. The list is very long for expenses, but for income, these are the incomes that we are talking about. Okay. Let me put in the first income. So the first and foremost, as we all know, is the gross profit. Okay, that is the first income the sole trader is getting. Then you add on some of these other income. So, Prof. Frank, please read for me what you see under the income.
Under income, gross profit, discounts received,
Okay.
investment, or interest on investment,
Okay.
commission received, rent received, and dividend received.
Okay. Please, is there any of the items that you don't understand? Prompt me so that I explain. Now, for discount receive, I think we have all heard of it. Well, during the discussion of the cash book, you saw that sometimes when we are paying suppliers, when a business is paying its suppliers, it can receive some discount from them. So it's an income, it's a gain to the business. Imagine you are owing your suppliers 100,000, and then as you are about to pay, they tell you to pay only 80,000. So you have received an allowance, a reduction. So discount is a reduction. So you have received a discount, and that is a gain or an income to you. So you add it to your income. Then investment income, when you make investment and you are getting some 5%, 10% interest. The common one you are aware is the interest, the treasury bill. There are other forms of investment you can venture into. Then commission received, I think I gave you a scenario. Maybe you go, the business renders some services or perform some services for someone and then take some commission. Rent received, yes, the business, like the car business I told you, the car dealer can rent out some of the car and receive rent. Dividend received is a form of interest on investment, but this is when you invest in a company, you invest in the shares of a company. If you buy the shares of a company, and when we say you are buying the shares of a company, it simply means that you are a part owner of a company, right? Okay, remember the types of business ownerships are sole proprietorship, partnership, and then you have the company. So when you invest in a company, you receive dividend. Okay, so these are the incomes that it will be popping up in your exam, so pay attention to them. The common ones are discount received, commission received, rent received, okay, and maybe sometimes interest on investment. But the one that appears more often is the discount received. Watch out. Now let's go to some of the expenses that you may come across under a sole proprietorship. So I've been able to list a lot of them, okay, but the list is plenty, so you can also add on as we move on. So you have rent and rate, insurance, salaries, motor expenses, discount allowed. So the opposite of discount received, discount allowed is an expense. Carriage out was what you sometimes refer to as delivery expense. When you are delivering your product to your customers, the cost of transportation is carriage outwards. Then we have bad debt. But we will speak more about bad debt, but simply when you see bad debt, it means that a debt that cannot be recovered. Okay, a customer owes the business, but because, for example, the customer is dead, the business cannot retrieve the money. So the debt becomes what? Bad or irrecoverable. We have advertising, lighting and heating, interest on loan. Yes, when the business goes for loans and we are being charged some interest. Repairs and maintenance, commission paid. Yes, the opposite of commission received, right? So the delivery expense is popping up here again. Then bank charges. If you are banking with some financial institutions, sometimes they charge you for the services they are giving you. Let me even use the Momo as an example. MTN Momo, when you go and do cash out, they charge you something. Okay, so it is similar with the banks. Sometimes you go for checkbooks, ATM cards, you pay for them, and all these are bank charges. Office expense, administration expense, electricity, telephone, postage, printing and stationery, miscellaneous expense, selling and distribution, depreciation of assets. We'll talk about this depreciation, but when you hear depreciation, it means that an asset's value is decreasing or falling. So example, I'm sure the first day you bought your school bag, it was very nice. But after continuous usage, the zip is wearing off, some parts are tearing off. That is depreciation. Okay. Now let's look at the format of the profit and loss account. So one thing you have to get is that in the profit and loss account, we bring the income and then the expenses, and then we try to look at the differences between them to arrive at the net profit or net loss. Let's look at the format of the profit and loss account. And here it comes. So it also has a title. I think I'll leave you to study it a bit, and then we'll continue. I think we have 4 minutes more to the end of the first session. So I'll put the profit and loss format on the screen so that you go through, and then we'll discuss in the next session.